We're going to take a look at the updates for 2025 that were made to the federal tax brackets and the earned income tax credit. Actually, we're going to take a look at a few other federal tax updates as well. These are changes that might affect you when filing your 2025 federal tax return in 2026. I'm also going to give you a couple of tax strategies that you might be able to use to reduce your federal taxable income. Each year, the IRS makes changes to the federal tax brackets to try to keep up with the cost of living. This just means that the government is trying to keep taxpayers from paying more in federal taxes, although they have not received a real increase in income. Basically, they are trying to prevent bracket creep. Bracket creep is what happens when taxpayers are pushed into higher tax brackets because of inflation. Now let's look at an example of how the new 2025 changes to the tax brackets would affect a married couple filing jointly with $235,000 of taxable income taking the standard deduction. In this example, their highest tax rate would be 22% for 2025. In 2024, the tax rate would have been 24%. So all other things being equal, this couple would pay $549 less in taxes for 2025 than what they paid in 2024. If you fall into the higher income category, you have to calculate your tax bill twice. You will calculate your federal taxes using the regular federal income tax system and the alternative tax system as well. Then you would pay the greater of the two. This is done to try to prevent higher income taxpayers from not paying anything in federal income taxes. To prevent low and middle income taxpayers from being caught up in the alternative tax system, there are exemptions. The exemption amounts have changed. The new amounts for 2025 are $88,100 for unmarried taxpayers, $137,000 for married couples filing jointly, and $68,650 if you're married filing separate. Like I mentioned earlier, tax bracket changes aren't the only changes made for 2025. Here are some others. First, we have the capital gains tax rates. If you're single and your taxable income is $48,350 or less, you will not have to pay the long-term capital gains tax rate. If you're married filing jointly, it's $96,700 or less. Please take a look at your screen for the amounts for each filing status. Up second, we have the earned income tax credit. The earned income tax credit is for low to moderate income taxpayers. If you fall into this category, it can reduce the taxes you owe and possibly increase your federal tax refund. If you have 3 or more children, the maximum EITC that you can get is $8,046. Please take a look at your screen for all the categories, income thresholds, and phase-outs for the EITC for 2025. Next, we have the standard deduction. If you're single or married filing separately, you will see an increase of $400. Your new standard deduction for 2025 will be $15,000. Married filing jointly will have an $800 increase. The new amount is $30,000. If you file head of household, your standard deduction will be $22,500. You're getting a $600 increase in 2025. Okay, now let's talk about reducing your federal income taxes. Even if you're not a high-income taxpayer, you should look for legal ways to reduce your taxable income. So here are a couple of strategies you can try. Each year, you should review how much salary you can afford to defer into your 401k. Of course, you always want to max out the employer match because it's basically free money, but you should consider putting in the maximum amount allowed on the employee side as well. This will help to reduce your federal taxes right now. Also, if you have a traditional IRA and believe that your income will increase as you get older, now might be a good time to convert that traditional IRA to a Roth IRA. If you do it now, you will take advantage of paying taxes on it while you're still in a lower tax bracket. Another tax strategy to consider is if you're close to being able to itemize your deductions, try using the bunching method. For instance, if you have medical expenses, you would make sure that you get any medical procedures or buy any medications before year end to increase the amount spent for the year. You could do the same thing for some of the other itemized tax deductions as well. The goal is to get enough itemized deductions to exceed the standard deduction threshold so you can move down into a lower tax bracket. If you want to know about some of the itemized deductions that are available to you, please watch the video in the upper right of your screen. If you want to know about the changes for 2024 for your federal tax return that you will file in 2025, please watch the video on the lower right of your screen. See you next time.